Good day everyone, this is your European Open briefing for Tuesday, September the 20th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's going on in the currency markets today. Major currencies have been pretty much range-bound as markets seek direction from the Federal Reserve and the Bank of Japan. Both the Fed and the Bank of Japan begin their two-day policy meetings today, and this is pretty much dominating the market theme. The Fed is not expected to raise rates at its meeting tomorrow, but it may lower the longer run rate forecast. So this is something that market participants are going to be watching out for. The Bank of Japan, on the other hand, may surprise the markets with some changes to its stimulus program. In other news, the RBA published its meeting minutes of its September meeting, which were less dovish than what traders were expecting. And also, crude oil prices retreated from yesterday's highs in Asian trading today. Starting with the dollar-yen pair, the dollar briefly spiked up to above 102 yen earlier during Asian trading, but came under pressure before the start of European trading. Markets are not expecting any move by the Fed tomorrow, but the expectations are that in its latest quarterly dot plot, the Fed will lower its forecast for the Fed funds rate, and this may put yet more pressure on the dollar if the Federal Reserve forecasts that the longer run interest rates will be much lower than it had previously forecast in the previous quarter. The Bank of Japan meeting is also beginning today, and it's expected to announce its decision tomorrow, and this may overshadow the Fed's meeting if the Bank of Japan announces more stimulus measures. Particularly, there is speculation that the Bank of Japan may opt for some unorthodox measures to steepen the yield curve of Japanese government bonds if it decides to cut its rates deeper into negative territory. And the reason why it may choose to steepen the yield curve is to lessen the impact on financial institutions of higher negative rates, because back in January, when the Bank of Japan first introduced negative rates, this had a big negative reaction by financial institutions, as negative rates are known to damage the bank's profitability. However, even such measures may not be enough to convince the markets. We've seen from the previous Bank of Japan meetings this year that the yen has tended to rise after the Bank of Japan announcements, even after they've taken extra stimulus measures, both in January and last in July, when they expanded the purchase of ETFs. So if tomorrow's decision fails to deliver in terms of another big shock to the markets in terms of large measures to that would convince the markets that the Bank of Japan is serious about meeting its inflation target, then we may yet see the yen rise again against the dollar. Now, moving on to the RBA, we saw the Aussie hold on to pretty much most of yesterday's gains. It's trading around 0.7550 today, and it was boosted today by the meeting minutes of the RBA September meeting, which were much less dovish than what we've known to expect from the RBA. In the meeting, the bank said the current stance of monetary policy was consistent with sustainable growth in the Australian economy and achieving the inflation target over time. So this suggests that interest rates are likely to stay on hold for the foreseeable future. And this helped the Aussie move up higher again today, and despite house prices rising by less than expected, with the data out earlier today showed house prices were up 2% in the second quarter versus forecasts of 2.5%. Now, moving on to the euro was firmer today. It shot back above $1.12. The only data we saw out of the Eurozone today were German producer prices. German PPI dropped by 0.1% month-on-month in August versus expectations of no change. This had limited impact on the euro. The euro mainly moved higher as a result of a weaker dollar. And we may see some more fluctuations in the euro versus the dollar, particularly tomorrow when the Fed will announce its latest decision. There will be no major data out of the Eurozone until Friday, so the euro is likely to be vulnerable to dollar moves until then. Now moving on to crude oil, we've seen crude oil drop back below $44 a barrel for WTI. Prices were boosted yesterday on growing hopes that major producers will agree to freeze output at the September 26-28 meeting in Algeria. But there was some news today from Venezuela when they said that supply needs to fall by at least 10% in order to achieve a balanced market, and this once again put pressure on oil prices. Looking at what's coming up later in the day, it's going to be another fairly quiet day. We're going to have the latest dairy auction, and this is likely to impact the New Zealand dollar, which is sensitive to dairy prices since dairy exports are critical to New Zealand's economy. And after that, we've got some US housing data. Building permits are expected to come in at 1.17 million in August. And then we also have housing starts, which are expected to come in at 1.19 million. And after that, we've got the latest API crude oil inventories, and that's likely to impact crude oil prices. That's it from me today. Thank you very much for watching, and have a great day.